The blue chips are your stable companies, which are very stable. Delta, Econet, Insco, Sidco, BAT, these are your blue chips. And if you look at the way people invest, okay, blue chips, those are your blue chips. You say Delta, Econet, Sidco, Insco, yeah, Old Mutual, okay? Then there are what are called middle tier stocks. Middle tier stocks, they're not so big, but they're there. You have your counters like Axia, you have counters like Simbisa, you have you you've got ABC, FBC. These are your middle tier stocks. They are not blue chip, neither are they small. They are there. We know them. Everybody knows Axia, right? Everyone in the car, Transev, TV sales and home. We know this, right? That's Axia. Simbisa, we know. Chicken Inn,
Yeah.
Pizza Inn, this you know. ABC, Bank ABC, FBC Bank, Building Society. These are your middle tier stocks. Then we've got what we call penny stocks. Fall Gold, Masimba, whichever. Which are the penny stocks? Okay, so right more. Yeah, Masimba Nanga. Okay, these are the three classes of investment types of stocks on the stock market. Blue chips are associated with the elderly. Okay? They don't have anything to rush for. They move slowly and patiently. This you expect your 50-year-olds to 94-year-olds to invest on this one. Why did everyone laugh when I put 94? Anyway. The middle tier stocks, you expect your 30 to your 49 years to invest in. The penny stocks, you expect they're those guys, 15 years of old, who are very ambitious. Some of us who started at grade 6 looking at this, maybe to 29 years. This is academic. It's not inscribed in the stock market. This is from Nast Finance. 3 types of investment and all. But your elderly, they don't like risk. They don't want this noise on the market. They either want property or this. Okay? Then we have your middle tier, which we are in or are almost in or are almost out. But this is where we are. Here, these shares are, okay, I'll start with these ones. These are very risky. Okay? These ones can just close tomorrow because this has a negative balance sheet. Okay? That's why I'm the one who sold it at 2.2 from 0.6, shooting it all the way, this one. Masimba, small, good, not so risky, but very good. Your returns here will definitely be 500% and beyond. Or, this is best case. Worst case, 0. It's a choice which you have to make. The middle tier, your returns here are from 20% to 200%. You can't see Chicken Inn went down because chicken slice came. It's a bit weird. For the next 5 years, we'll be having these guys. These ones will never go. But their return, usually 10 to 50%. Okay? So what do we do when investing? You can't put all your eggs in one basket because this basket will definitely go bad. Neither can you put all in this basket. It does not move that fast. This one is dead, but dead. So what do? This is where we define the type of investors. When I say this is the different type from bull, bear, and pigs, this is now defining the level of aggressiveness. So this is what we call a portfolio. In your portfolio, you're supposed to have penny stocks, middle tier stocks, you can finish it there. Or penny stocks, middle tier, blue chip, then finish it there. Or penny stocks and blue chips and finish it there. But you can't just have these alone. They will disappoint you or over impress you, which will also lead to disappointment. So you can't have these alone. You should have a mixture. So you'll find an elderly person, they'll tell you that, okay, the stock market, the money you come with, you're ready to lose it. You're prepared to lose this money because companies can just close down. Okay? If somebody just comes and bombs Econet, that satellite dish which transmits and all, it will take them 3 years to build it again. So it could cause serious problems to Econet. That's why they have soldiers guarding it with guns, not button sticks. It shows. It can just be folded in one shot. Same with Delta, if somebody pours poison in the beer which is being prepared and it's dished, 500 drinkers die and walk into heaven drunk. It will lead to Delta crashing, okay? Same with Insco. These guys are in fruit, Old Mutual Insurance. These guys are sitting on a high risk, though they are blue chip. Why? Because the people who lost their pensions from 2000 to 2008, when we had the hyperinflation, they were just told it's gone, right? Now I heard there is a bill which is tabled. It's in front of the president, President ED. If he signs it, insurance companies have to pay for the loss in pensions. That's a big risk. So there is risk everywhere. So you can't put all your money there and think, I'm done for life. No. So usually people put 50% here. They're ready to lose half the money. At least half will remain. Okay? Then 30% here. And then 20% here. Okay? This is a normal investor. When I say normal, I mean the British, when they walk into Zimbabwe, this is what they do. Okay? Because they've got money, they've got access. But some of us, we came from a net worth of $500 in 2014. You want to grow that fast. So I can't do this. But instead, I do this. So this is a normal investor. This is an average investor. Maybe 40, 25. Meters are balanced. 40, 25, 35. This is an aggressive investor. This is normal. The other one now is aggressive. Okay? But we came from nothing. We came from times in university where we could not afford vegetables. We would have salsa and soup. This is where we came from. So I could not do like the Brits. I would do the opposite of the Brits. 30%, 30%, and 50%. This was me. Because, you know, then I got to an extent where I had here 0%, 30%, and 70%. Why? Because I did finance. I had the ability to go into the company financials and break them down. People will now, you saw the other time, I looked at the daily board. Word for word, income statement, balance sheet, cash flow statement, notes to the financials, the director's outlook, So I know exactly what is going on. So, bye-bye. Then that's when you shoot and go. So when you're building, this is what we call a portfolio. A portfolio is a group of assets. So you will have your 20%, your this, and your this. You're owning, let's say, 3 companies or 4 companies, and it's your portfolio, it's your basket. So if one goes bad, the other goes up. If the other goes bad, the other will go up. If all go bad, you need to tell us. So yeah, I deliver it.